If you didn't know, Elon Musk's pay package is back up for a proxy vote. His 2018 pay package was overturned, of course, by a Delaware court earlier this year. It was specifically called an unfathomable sum at $56 billion. What I find interesting this time around is I sort of thought going into this, it might be a rubber stamp type event. Last time around, they were incorporated in Delaware, that perhaps the shareholders would think of this as, I don't know, political meddling, and that there are two things up for vote. One, to incorporate in Texas so that the Delaware Court of Chancery can't do the same thing again. The pay package would be revoted, resubmitted, reapproved. But that doesn't seem to be the case. So two things I think are pretty interesting this time around. Marcy Frost, who's the CEO of CalPERS, said they would vote against Musk's compensation package despite having supported it in 2018, which I found fascinating. And a new development within the last couple of days, a 71-page report by Glass Lewis, which is effectively a proxy advisor, advised to reject the Musk's proposed compensation, which is now valued somewhere around $46 billion as opposed to $56 billion the first time around, with the reasoning that it could dilute existing holders' holdings in Tesla. Of course, it will. So I find this fascinating. Today, though, I was reading something by a Tesla investor. His name is Gary Black. He's the managing partner at the Future Fund, CEO, CIO, and portfolio manager. He emphasized, and I think he's the only one who's just said this so far explicitly, that he's advising people to approve this. He's saying that rejecting it in the 2024 proxy vote will lead to a fair chance, doesn't specify, but a fair chance of Musk leaving Tesla or focusing his efforts on ventures like XAI. We all know he's just raised $6 billion for that endeavor. My question to you, actually, one more quick point before I ask the question. I find it interesting, if you look at the proxy vote, it's June 13th. So I look at the series options. I look at, series volatility in the June 14th, the options expiring June 14th. There is a bit of a kink. Now there is. This morning there wasn't, but it looks like there's a bit more of a kink this morning. In other words, those options have elevated series implied volatility, implying that there is binary event pricing in those options. There wasn't before, but now there is. My question to you, Tom, is what do you think about Gary Black and his statement that there's a fair chance, if this does not go through this time around, that Musk could leave Tesla? What's your reaction to that?
It's a stupid comment. First of all, he's still going to be the largest shareholder. He's never going to leave. That's absolutely ridiculous. So that's not going to happen. As a shareholder, you have to vote against this. It's already failed, meaning that Musk has already created all these other businesses, and there is no stopping him. I mean, he's obviously on a mission to create he's young. He's only, his early 50s?
Yeah, but why aren't these businesses under the Tesla umbrella? They really should.
I agree with you, but let's just talk about what it is.
Well, do you think strategically he's done that to create some leverage here? Like,
what leverage does he have
after he already took the company from $50 billion to $570 billion? At this point, he has very little leverage.
You are the richest person in the world. It's not about leverage at this point. There's no such thing. You worry about leverage when you're not in his position. When you're in his position, leverage is not relevant. Leverage is assumed, so it's not important. The point with Musk is he's young. He's in his early 50s or whatever he is.
52 years old.
52 years old. He's crazy young. He potentially could build 20 more businesses at the pace he goes in the next 20 years. There's no stopping him. They're going to be throwing money at him no matter what he does. The idea that he raised, I wrote about this last Sunday. There is in the cherry bomb. He's already raised on a $24 billion valuation. $24 billion. It's hard. If you ever tried to raise capital, try raising capital at $24 million on an idea. It's hard to raise capital at $24 million on an idea if you're a proven successful entrepreneur. Like we've started other business stuff and we go out and raise money at 20, 25 billion and we're proven, and it's hard. It's not easy. He's raising it at $24 billion.
With a B.
with a B. It's insane. That's 1,000 times, right? That's 1,000 times.
Times
24
billion.
Yeah, million to billion is 1,000 times. So, so he has 1,000x premium on his ability to raise capital. It's insane what he's able to do on just an idea. The concept of leverage is at this point completely irrelevant. There will be no controlling Elon Musk. Whether you give him the stock or you don't, it will mean absolutely nothing. What you're doing in this case is you're giving away money that you don't need to give away.
I know, but I'm really surprised that that's the side of the fence you're on.
Because I'll tell you why.
You made a deal. You made a deal that was so advantageous to you. When you made that deal,
he had to.
Said, I don't care what it would cost me because my company's going to be a $500 million.
I get it. I understand. But you know what? Sometimes things get to numbers that you just can't make sense of it. And in this case, there's a bigger risk now. And this is what I wrote about.
Forget about
that deal.
When he made that deal, maybe Tesla doesn't become the stock or the company that it is because
no, it does.
10 other companies outside of Tesla, and Tesla just becomes a nothing and not the brand that it is.
And I doubt any of that's true.
We don't know because he made the deal.
That's right,
man.
So, but here's and you don't know what the circumstances were of making that deal and everything else last time. But here's my issue.
They needed to make it.
You're about to set a precedent. The most dangerous thing about this is the precedent. There is going to be, it doesn't matter who's the next person. Like, where do they draw the line? Does the CEO of OpenAI, does the CEO of NVIDIA, does the CEO of every single high-tech company then begin to demand, at early stages to the board, I want 25% of the company or I'm going to leave. This sets a precedent where I do not know how we are going to get around it in the future if they approve it. The shareholders lose no matter what. This is the hard thing about this. The shareholders are either going to be diluted if they vote for it, or they're going to lose some of Musk's quote genius if they don't vote for it. So they're losers no matter what. That's why I think you were talking about Tesla stock and the binary event and everything else, because the shareholders lose no matter what. But the problem here is way bigger than that. The problem is, if you get rid of all the non-competes, you get rid of everything else, I totally am in favor of that. But how do you control not a CEO, but a founder / genius? How do you control it? Because we've already shown even guys like Adam Neumann, that can take a company from $40 billion down to zero, can still raise billions of dollars just on the fact that they were able to take something from 0 to 40 billion, even though they weren't able to maintain it. So how do you stop somebody that is a proven success with multiple 100, $200 billion plus companies in SpaceX and Tesla and whatever else he touches?
Contract is a contract.
It's not in this sense, because it wasn't. You have no idea of the circumstances of whatever that deal was made.
Contract is a contract.
You don't understand
the compensation could be negotiated lower if both parties would agree to it. But a contract.
I understand what you're saying, but also, okay, they also took this to court and he lost. Okay, so it's not that black and white. He took it to court in Delaware and they lost, and it wasn't even close.
Out of that chancellor's
whatever, they lost, and it wasn't close. So this thing has been argued in court, and he lost. And my bigger concern is what is going to stop
You've been deals with contracts. What if they decided
it's a different situation. It's a different situation. What do you do in this case? What do you do? I wrote about this. If you're an athlete and you're a superstar athlete and you want more money, so you decide you're going to sit out and not play until you get money, you have that. You don't have to. You can choose not to get paid and sit out for more money. If you're a CEO, you can go to a different firm. But if you're a founder and you are the genius behind the concept or the idea, and everybody is betting on you, what is going to stop any of these guys from demanding a certain percentage of the company over and above what they have, or they're just going to leave and start something else? And that is the danger.
Start their own basketball league?
Whatever.
Let them.
No, I'm not talking about athletes. I'm talking about CEOs.
The example you used.
No. I use the example of an athlete because an athlete can sit out, not start their own league, but they can sit out till they get more money, or they can just not play.
Fine, you don't pay them. They
Don't
sit
you
out.
think-
But they don't. But they always pay them. That's my point.
Victor, where do you
leverage.
stand on this? It's 1-1 here. So where do you stand on this? Don't
think,
go down
it's
the middle.
tough.
Make a decision.
I will. I'll give you my answer, but I never like to be super binary. Here's my thing. I think the shareholders had a chance to vote on this. They approved it. I think the whole idea of taking this to court the way that it was, to me, I find that there's a great injustice there, in my personal opinion. You'll say that's not the case. You'll say our court systems, our judicial systems are set up the way that they are, and that justice prevailed one way or the other. I think it was ludicrous. I think when
It was a
this whole
different
thing was
time. It was a
approved-
different set of shareholders. They should have put a date on it. They didn't. It was just stupid. But it was egregious, and that's it.
But here's the thing, man. Like, the idea that, oh, it was silly of us, we should have known better. That doesn't hold up, man. It doesn't hold up when he's created shareholder value. He's taken shareholder value from $50 billion to $570 billion. And that was his end of the deal. He delivered that shareholder value. Like, to say, hey, now that it's here, and now that I'm a shareholder and I've benefited from increased shareholder value, to say like, that was crazy. I do understand now, though, if you're an institutional investor, Elon doesn't have the leverage, you've already created this, and you get a redo, why would you vote for it? If you feel that there's a low probability that he leaves, why would you vote for it? There's no real incentive unless you feel like the threat of him leaving is high. And if the institutional investors, as you, feel like the threat of leaving is low, then doesn't this become like a little bit tradable? Doesn't that increase vol, that extra 2 points of vol that's sitting in there in those June 14 options, doesn't that become a little bit tradable to use that inflated premium?
I'm fascinated that you're hung up on the vol part of it. I don't think that I never question the vol. I don't question the vol in the market. Like that to me doesn't mean anything. That just means the market doesn't care. And if there's no vol pumped into Tesla, they think it's priced. All it means is they've got it priced right. I couldn't care less about the vol. I think the precedent's the most important aspect of this whole thing. I don't know where you draw the line.
So the reason I bring it up is I'm trying to make the conversation actionable, but let me let that go. So where do I draw the line? You keep making this issue about the precedent here.
Yeah.
And I think it's ultimately the market decides, right? Shareholders decide, boards should decide. It shouldn't. I personally feel like you're trying to make this a one case fits all. Every founder, this is a precedent for every founder. And
not every founder, every crazy successful founder that has that kind of leverage.
Sure. But there's at some level, I'm going to make this really simple. But at some level, there is a cost benefit analysis. You do the math, right? What is my risk in the worst case scenario if this doesn't go my way? If this guy walks away, what do I think my risk is? And then what is the compensation that's being asked? And you just basically do you do weighted probability on both sides of those, and you come up with a fair compensation package. Is it $46 billion? It's probably not. Is it some decent, juicy number? It probably is. But my issue, if you're going to make this about precedent, then you and I have to have this back and forth argument on what is the fair number. If it's not 40, if it wasn't 56, and if it's not 46, what number makes Tom Sosnoff comfortable with the precedent? Is it just the fact that this is such a big dilution to the shareholders?
Yeah.
If so, what's the number?
Yeah.
What is the percentage of dilution that can be acceptable in a CEO compensation package?
So it's 10% right now. Is 5% acceptable?
I don't know the answer to that. I don't know.
Exactly.
I'm not a shareholder.
It's unknowable. It cannot be a flat number. This is the beauty of capitalism. This is the beauty of capital formation. This is the beauty of free market system, is that you can evaluate the talent and you can compensate the talent. You have a once in a lifetime mind, a once in a lifetime genius, and a once in a lifetime sort of like time and place where this value creation took place. And I think to think of this as a cookie cutter scenario where you've got to come up with a scenario for Elon Musk, a once in a generation talent that has to fit Joe Schmo CEO founder down the street. To me, that doesn't make any sense, because you shouldn't be judging and compensating this guy the same way that you judge Joe Schmo founder down the street.
No. I'm not talking about it from a compensation side. I'm talking about it
as a precedent, from a precedent standpoint.
Yeah.
If you're talking about from precedent, Tom, if I don't mean to interrupt you, Victor, for a second, it rarely is an event, the one event. There's always things that led up to it that gets us to this point where we're like, oh my God, how did we get here? You think about Elon Musk. He was able to tweet out information that should never have been made public without any type of recourse. He was able to.
Again, you're making generalizations.
He was able to open. No, I'm not.
Yeah, you are. You're making generalizations.
I'm putting steps in.
I know, but you're making generalizations.
He was able to open companies outside of his CEO role, which should never. I don't know any other company, any other CEO has ever done something like that.
Okay.
So you've got these things. Now you've given this person so much power and so much leverage. Now you have a contract that you made that you don't want to honor. It seems a little. You
don't know. And you keep using the term contract and everything else. It's been tested in court. It didn't hold up. And so I don't necessarily agree with any of that. But the whole point is, like, again, and you're making generalizations about things he said. The SEC is all over him. If they wanted to come after him, like they come after everybody else, they certainly could have, but they chose not to for whatever reason. So it's not like we're all held to the same. We're all live under the same regulatory, under the same regulatory guidelines, same board, same everything.
Oh, I remember when those tweets came out, and the first thing we both would say,
we said it, but we didn't. We're not a regulatory body. And they didn't act. But again, I just get back to the point. At where does it? We've always looked at this, through the eyes of athletes, hired gun CEOs, actors and actresses, that kind of thing. We've never looked at this in the case. Elon Musk is the first to test this. And the question becomes, okay, where, it's clearly boards have made lots of mistakes over the years. Another mistake I can give you an example of is, the board at Robinhood giving them all the voting rights to all the shares. Ridiculous. Sure. That kind of thing will never happen again. So they can't make a decision, idiotic moves like that. You are going to have situations where in the past, they've voted for bad things. They've done bad things, like they've made bad mistakes. I get all that. In the future, looking forward, where do you stop a genius like Jensen Huang or whatever you want to say? You take the NVIDIA CEO. Let's say, okay, we already know he's got hundreds of billions of dollars. Okay, whatever his compensation is, who knows? Like at this point, he's probably worth, some crazy number. What if he wants to start another company? How much money do you think he could raise tomorrow? He could raise $1 trillion. Elon can raise 24 billion. He could raise $1 trillion. On basically saying he's leaving to start another AI company. I mean, I'm just saying or you give me 50% of NVIDIA. I don't know. Where does it stop? That's my only thing.
I guess for me, it always comes back to what is the part of the precedent that you don't like? And for most people, it's just the number. It's not like people look at this compensation package and they go, this wasn't comprehensive, or this did, that you got there by gaming or financializing the return, but not actually creating value for either the consumer or the shareholder or the associates of that company. I would generally say that the way that the comp package was structured, the way the incentives were structured, to me, that is a much better precedent than a lot of the CEO comp packages. If you look around the S&P 500, I'll go one better. I don't want to make this super political, but to me, I always wonder, and if you're saying I'm going all over the place, I'll reframe this point. But to me, I think when you've got a leader who's aligned, his incentive package is aligned to associates, to customers, and to shareholders, to me, that is a good incentive. Now, we can argue over the number, and it clearly is the number, not the way this thing was structured. It's the number that makes people uncomfortable. But to me, I look at Congress, right? I look at presidents. I go, why do we have a straight salary? Why is nothing that we do on the government side of things tied to the unemployment rate, tied to GDP, tied to some metrics that tie back to the shareholders, the consumers, the participants of the global economy?
I'll tell you why. Because because that creates the wrong message for on a short-term basis. It's because that's the same thing as giving people an earnout. And the problem with an earnout, just like creating an earnout for politicians, is that what you're essentially doing is you're having them focus on the very short term and not for the long-term good of the country. When you're an elected official, you cannot be looking at what about 6 months from now. You have to be looking about what about 6 years or 60 years from now. And it's not fair to have everybody focused on short-term numbers and not long-term results.
Let's get back to stocks for a second.
Okay.
If I said to you, you have a $5 billion company, and if you make it in 10 years, a $500 billion company, we're going to give you 10% of the company. You, as an owner of the $5 billion company, would you think that was a fair deal?
$5 billion company goes to 500 million?
$5 billion.
$5 billion company goes to 500 billion.
Half a trillion.
Sure.
That's basically what he did, isn't it?
Well, it's
maybe the numbers were a little
50 to
skewed. Maybe it was a
570,
$30 billion company.
it's a lot more than that. Yeah.
Maybe it was $100 billion. It went to 500.
It's a lot more than that. But yes, yeah.
That's what he did. And
It's actually a $50 million company. So if it gets to 500 billion, let's just say you get 25%. It's way more skewed than that.
Well, he gets 10%. They're trying to give him 50 billion. It's a $500 billion stock, right?
Well, whatever that. I don't know what it was.
I don't know. But all I'm trying to say is you would make that deal.
Yeah.
That's the deal that they were faced with when they first made the deal.
You don't know.
So then let me ask you why you think this is not tradable. Why you think that kink in the series fall, this is trading like a binary event as it should. You're getting elevated implied volatility in one series. Tell me why you look past that. And you don't think that's interesting. You don't think that's a tradable opportunity.
Because the stock market has the unique ability to price everything in almost perfectly. And the stock market has essentially said right now that Tesla is trading exactly where it should be trading, given the risk in this. Like the stock market doesn't believe that Elon is going to be any different one way or the other. That's the stock. Like Elon's already created all these other companies, already raised all this other money. He can't cage him. Can't put him on a leash. And so they already know what they've got. When they made this deal originally, here's my guess. When they made this deal originally, they thought Elon was going to give 100% of his efforts to Tesla. That was going to be his role. And what it turned out to be is that's not 100% of his role. Elon is a very different person in 2024 than whenever he made this deal. Was it 2010 or something?
Sure, just look at him.
Okay. I mean, he has not honored his commitment to Tesla alone. Yes, Tesla's value has gone up because.
But the judge said it was because the board was skewed in his favor.
Hold on. Tesla has gone up in value a lot because he was first to market and he changed the whole automotive industry. But he is also in the process of the last 10 years. His focus is on, it's on Twitter, it's on SpaceX, it's on every other company it's created, and now is AI and everything else. He's not the person that he has not committed himself to Tesla. Yes, I think this is a bad trade for Tesla shareholders if they vote in favor of it. It's a bad for Tesla shareholders, and it's a bad precedent to be set.
I don't get the precedent thing, but I'm with you on, I don't get why there would be incentive for the shareholders if they don't believe he's actually going to walk. I don't believe there would be incentive for.
There's no incentive for the shareholders no matter what. They can't win. The shareholders lose no matter what.
Yeah.
If they vote for it or against it, they lose either way. It's a loss, but it's already priced in the stock. It's already priced in.
I'm going to go away scratching my head, not understanding why you don't like the increased series volatility. Because you think this is a nothing burger and the market's giving you 2 points of implied volatility in this series, you don't care. I'm going away. I'm scratching my head. I'm going to have to send you an email and try to figure out why. I'm still scratching my head.